For today's MLR report, I'll start with the euro. Euro did get some long liquidation, some cashing out into the highs. Market did cycle back. As you can see, we did trade down as low as the 2750s area. So pretty decent pullback, about 70 some or almost 70 pips from our highs. And the market continues to cycle in that range. We did have all buyers of any significant position size that bought this pullback and held long inventory. They have now cashed out into the cycling of price in this area. Last night there was a thin order book, meaning thin limit order activity with some light buying, pushed back up to highs, and it was right away resold. So right now in the euro, the only buyers we have left of any significant position size are those that bought this area of price through the pullback down to the 2500s area. They were accumulating and buying and building long inventory, about 5, 6, 7,000 contracts, and that has been our recent pullback lows. The market did rally, we pulled back again, and any new buying that took place in this area has cashed out. So right now the euro, the only held long inventory of any significant position size is any buyers that are in this 2540s area and below, predominantly those that bought down here in the 2540s down to 2500s level. That's the bulk of the retained held long inventory at this time. That is the bulk of the retained held long inventory at this time. As you can see from the open interest ratio, we have less than a third probably holding long inventory and about 2/3 short in the market. Of course, this is the CMEFX 6E instrument, and we still have the market holding and cycling near highs. With all this market order selling, there was fairly strong limit order activity on the buy side absorbing a lot of this selling. We did have like I said, we did have about almost a 70 pip pullback, decent pullback off highs, but no big price collapse that would be built from market order selling mixed with thin limit action in the order book, meaning that the limit order activity is not opposing or absorbing the market order selling. So far we have limit order activity that is absorbing and holding and containing price in this range near the recent highs. Any challenge back at the 2820s now, we still have a very substantial amount of short inventory then, that if it started to unwind into any new highs, you could get a very linear move with some extension out of this area. I'm still looking at a little bit lower on the euro dollar. We'll see. Now if the euro dollar sells off a bit and we hit our lowest level of inventory, then we're going to have the euro dollar literally stuck up in the upper range of recent weeks trading, vacant of any significant held long inventory. So that means then the only way to get the euro dollar lower, we're going to need a catalyst that would draw in newly initiated sellers to be the prime component for driving the euro lower. So once the last significant held long inventory lets go, then we start to lose the fuel for downside movement in the euro, because we no longer have long positions that if they decide to let go, sell to cover. That selling would be then absent of any potential down moves. So I'll be watching that. That will be a key, neutralization. If we do hit that, that will be where the open interest would be at extreme out of balance. You have a market that the predominance of everybody holding open interest is short and nobody of any significant position size long. So when those happen, those are very key supply and demand events. So I'll be watching the euro for that. Okay, so we'll take a quick look at the ES. As you can see, the ES, we did get the pullback through the 27s level, and we did get that first level that some of the last buyers in to let go. Once they let go, there was not a lot of newly initiated selling. We did have some thin order book action, of course, as we got into the end part of the day and the beginning of the after hours session period, so we drifted a bit lower. Since then, buyers did come back in as the euro was rallying at times during the EU session after its pullback and bounce, and we do have the ES trading higher a bit, so we've traded up to the 1430s area. So as you can see, that lift, we're right back to the middle of the pullback range from our recent highs, and you can see though that there's a fair amount of short inventory now sitting in this market, tied to sellers that sold off these recent highs. So next level of support now, we do have some new buyers that have come in here off the 1421s area. But the next key levels, of course, are still the actually it's the 1416 level just below us, and down here at the 1407s. Still have lots of long inventory at the 1395s area. That's the very large amount of long inventory that was accumulated still holding. But as you can see, we did get our first level of inventory. They did cash out and let go, and that did fuel the pullback yesterday, as we had equities, U.S. equities, running some sell program activity. The futures were reacting to that, and we were getting some long liquidation and some cashing out. So that's where we are with the ES. Any push back up to recent highs, we'd have to see at those new highs how much of the short inventory is still holding. If there's any of this inventory holding, 10, 20, 30,000 contracts, and we push highs and those contracts let go, we could then get a bit of new range extension higher. A 7 to 10 point range extension would not be out of the ordinary if we come up to highs and we still have 20,000 contracts or so suddenly start letting go. The only way I see us getting back up to highs and pushing, we're going to need a catalyst. We're going to need euro to go all the way back to recent highs and rallying as we have weakness in US dollar to bring equities back in and be a buyer right after a day where equities was just a seller and starting to cash out. Today I look for the market to trade in this range. Would not be surprised to see the market come down and retest this low area of the 1421s and change at least once. And there's a fairly high probability in this pattern that I've seen play out before, after the market goes completely out of balance from an open interest standpoint, that the market does have some additional breakdown. And we'll have to see what we get today, and I'll update you at tomorrow's briefing.